Hello and welcome to another daily dose of Satoshi's News. Today's date is Wednesday, the 2nd of October 2024, the year of 1,000,000 transactions per second or more. Experience the best of both worlds today at betbitcoinsv.com, the best casino and sports betting on chain. Have a little flutter in private using the original protocol and genuine Bitcoin. Right, let's see what we got in store for us today. I won't be able to go through all of this, but there's an epic post here from CSW called Patents, Corporations and Property Rights. This is quite a substantial article, so we won't be able to get through all of that, but we'll have a good crack at it. Then we've got this article here by BSV Blockchain saying nChain announces first implementation of verifiable AI on BSV Blockchain. Sounds exciting. CoinGeek has written articles here saying BTC mining profitability in freefall. Noise complaints rise. So, yeah, I mean, it's, again, epic article. Probably won't be able to get through all of that, but we'll see what it's about. Then we've got this one here by Aerospike saying Redis versus Aerospike. The table below outlines key technology differences between Aerospike 7.1 and Redis Enterprise 7.2. Find out what that is. Bitcoin history, check it out. Look, I started this on the 3rd of October. Because this is when Craig Wright was awarded the GIAC Security Expert Malware. He's only one of 4 individuals in the world to obtain this certification. So, starts off with about Craig. And look at this. This is where it finishes then. The 2nd of October. So we have literally completed 365 days of Bitcoin history. What an epic project this has been. Like, jeepers. What, the Crypto Cream, we've got FTX in there, we've got Bitfinex, we've got the D-List BSV campaign, we've got Pump and Dumps, we've got Silk Road in there, the Cobra case, I mean, jeepers, Halfini and everything. Oh, look what I found. I was looking for this image for years and years and years. I was thinking, I'm sure I had it somewhere. Went back one of my old hard drives, and there it was. I was just like, that's the image. Oh, fantastic. Brilliant. The dickening. Yeah, it's another episode that we've got in there. Good grief. What an epic journey that has been. So, yeah, I'm looking forward to completing that. Got this article on Silk Road on the 2nd of October, the anniversary of. And then we will just simply go through the figures as we normally do, see what is what and what's up with what is going down. Right, let's get on with it.
Satoshi, like a cowboy in the West, riding on the blockchain that they call the very best. 1,000,000 strong, them transactions flying free. Just wait for the Terra node, you'll surely see.
Alrighty. Here we go. Right, so patents, corporations and property rights. Let's see what this is all about. The foundation of true freedom. The notion that corporations and patents are tools of oppression used to stifle innovation and control markets is a common refrain among anarchists, cypherpunks and certain anti-capitalist groups. However, this argument is fundamentally flawed. At its core, opposition to corporations and patents is an opposition to property rights and, by extension, an opposition to freedom itself. To fully understand this, we must rigorously examine the role of patents and corporations in protecting individual rights, enabling innovation and ensuring a free and fair marketplace. Without these structures, freedom would be diminished, innovation would stagnate, and property rights would be undermined. Property rights, the foundation of freedom. The concept of property rights is not merely about physical ownership of land, resources or goods. It encompasses intellectual property, the products of the mind, and the legal structures that allow individuals to protect and profit from their creations. Property rights ensure that individuals have control over the fruits of their labour, whether that labour takes them from physical work or intellectual innovation. Without property rights, individuals have no recourse against those who seek to take what they have created or earned. In this essence, property rights are not only a legal necessity, but also a moral imperative. Freedom, in its truest sense, cannot exist without the protection of property rights. When individuals are free to own and control what they create, they are free to shape their own destinies. The ability to innovate, to invest and build is dependent on the assurance of what is created will not be arbitrarily taken by others. And again, this is why we don't want a one world government, because they own and control all the resources. This is the essence of individual liberty, the right to pursue one's own goals, to create wealth, and to enjoy the benefits of one's own labour. Patents, protecting intellectual property. Patents are a specific extension of property rights that protect intellectual property. A patent grants the inventor the exclusive right to use, sell, or license their invention, or for a specific period of time, providing them with the opportunity to profit from their innovation. This protection is not only a reward of the inventor's hard work, but also a necessary incentive for continued innovation. If there were no protection for intellectual property, individuals and companies would have little motivation to invest time, money, and resources into research and development. Why spend years developing a new product or technology if someone else can simply steal the idea and profit from it without consequence? Critics of patents often argue that they stifle innovation by creating monopolies. However, this argument ignores the fact that patents are time limited. Yeah, it does. Indeed, it ignores that. Time limited and designed to encourage further innovation. So in other words, they give the inventor the chance to actually compete by building a business before without being taken over by the big boys who got there first. By granting inventors temporarily exclusivity, that's exactly what they do, patents allow them to recoup their investment and fund future developments. Once the patent expires, the invention enters the public domain, allowing others to build upon it and create new innovations. Far from stifling progress, patents provide the legal framework necessary for sustained innovation. Opposition to patents, therefore, is a rejection of the idea that individuals have the right to control and profit from their intellectual creations. Without patents, intellectual property would be vulnerable to theft, and the incentives for innovation would be severely diminished. This is not just the theoretical argument. We can see the practical implications in industries where intellectual property is critical, such as pharmaceuticals, technology, and manufacturing. Without patents, these industries would not have the necessary protections to justify the enormous investments required to bring new products to market. Corporations, enabling economic freedom and risk management. Corporations are another extension of property rights, allowing individuals to pool their resources, share risks, and create wealth in a way that would be impossible for individuals acting alone. A corporation is a legal entity that is separate from its owners, providing limited liability to shareholders. This means that the personal assets of the shareholders are protected from the liabilities of the corporation, encouraging investment and entrepreneurship. Without corporations, individuals would be far less willing to take the risks necessary to innovate and grow businesses, as they would be personally liable for any losses or debts incurred by the business. Opponents of corporations often argue that they concentrate wealth and power in the hands of a few, creating inequality and stifling competition. Well, that's only if they're used in the wrong way. And a lot of people are hiding behind corporations these days, pretending that corporations are government bodies when they're not. It's outrageous. However, this argument overlooks the fact that corporations are essential for economic freedom and innovation. By allowing individuals to pool their resources and share risks, corporations enable the creation of new industries, products and technologies that benefit society as a whole. Corporations are also subject to competition in the marketplace, which ensures that they must continue to innovate and improve in order to survive. Moreover, the protection of limited liability within a corporation prevents the scenario seen in partnerships where one individual's failure or bankruptcy could lead to the ruin of everyone involved. This protection allows individuals to innovate without the fear of personal financial destruction. It fosters an environment where calculated risk can lead to great rewards. Without the structure of a corporation, innovation would slow, risk-taking would cease, and economic stagnation would ensue. The false criticism of anarchists and cypherpunks, misunderstanding freedom, we know about that, intellectual dishonesty, and the misrepresentation of property rights. Historical evidence, patents, corporations, and innovation. This is a great article. It's a great article. Conclusions, patents, corporations, and true freedom. In conclusion, patents and corporations are not tools for oppression. Well, it depends how they're used, obviously. They need to be regulated. As some critics claim, there are essential mechanisms that protect individual property rights, foster innovation, and ensure a competitive marketplace. Opposition to patents and corporations is, at its core, an opposition to property rights and, by extension, an opposition to freedom itself. Those who seek to dismantle these structures are not advocating for a freer world, but for a system where the stronger dominate the weak, and where innovation is stifled by the constant threat of theft and exploitation. True freedom is built on the foundation of property rights. Without the ability to own, control, and benefit from what we create, we are not truly free. Patents and corporations are vital to protecting those rights and ensuring that individuals have the opportunity to innovate, compete, and thrive in a free and fair society. Beautiful, beautiful finish there. Beautiful conclusion. Yeah, loving that. Alright, that's 11 minutes. Let's crack on. nChain announces first implementation of verifiable AI on BSV blockchain. Leading experts at nChain have identified and successfully tested ways in which the output of an AI system can be verified using blockchain. This can ensure the model operates according to its specifications, is free of critical bugs, and adheres to ethical standards such as fairness, transparency, and safety, all without revealing proprietary information about the system, a major step in bringing trust and accountability to AI. nChain is a leading global blockchain technology company offering software solutions, consulting services, and IP licenses for clients in various industries looking to benefit from the security, transparency, and scalability of blockchain. Founded in 2015 with offices in Liechtenstein, Switzerland, and the UK and Slovenia, nChain employs more than 260 staff and has a patent portfolio of over 3,900 patents and applications, of which over 1,090 have been granted. nChain is the developer of the BSV Node software, Terranode, and more. Demonstrating verifiable AI, nChain successfully demonstrated verifiable AI inference processing queries following the relevant transactions on the BSV blockchain. The transactions can be found on the mainnet with the corresponding generation code on GitHub. While this is a relatively new research area and something nChain only recently started exploring, after having successfully implemented verifiable computation on the BSV blockchain, the team challenged themselves to see if it could also apply this to machine learning. Training is a computation. Inference is computation. If you can do a verifiable computation, then you can do verifiable training or verifiable inference, says Dr. Hamit Attar, lead AI researcher at nChain. The team trained a simple neural network on MNIST, a dataset of images of handwritten digits. The model was then run on an input image, such as one provided by a user, and produced an output predicting which digit the input image represents. A cryptographic proof was generated to verify the output was indeed produced by running the model on the specified image while hiding all the information about the model. The proof was subsequently used to claim a small amount of BSV from the blockchain. In this case, from the user, here the BSV blockchain not only provides a decentralized independent verification platform, but also facilitates micropayments between a user and an AI model. With a verifiable computation approach, nChain can prove cryptographically that an AI model is trained on the claimed dataset. For example, it can prove that a generative AI model is trained on a dataset that is known to have no bias. More importantly, AI developers can prove that they did not tamper with the training dataset to train an AI model for malicious intentions. nChain can also prove that an output of an AI mode is obtained by running the specified AI model on the given input. For example, a piece of artwork can have a proof showing that it's generated by an AI model on a given prompt, or as a paid user, you can be sure that you're getting answers from ChatGPT-4 and not from the free versions. The relevant transactions on the BSV mainnet and code that generates them can be found on zkscript github.repo. Fantastic! The world needs to run on the BSV. Literally, sod the internet as it is with all its corruption and centralized control. We need the world to be running on a commoditized digital network, and that's what BSV is. Beautiful. Right, let's see what's going on here then. So CoinGeek said BTC mining profitability in freefall. Noise complaints rise. So let's have a quick look at that. There we go. Look at that. Difficulty adjustment. Difficulty adjustment due to the amount of hash rate being added to the network. Literally absolutely staggering. I mean, look at that. Look at that. For the year. January 2023 to January 2024. That's crazy. 1 year. Yeah, look at that. So that's gone from like 57 terabytes to just below 90. I mean, it's almost doubled in a year. Literally, that means profits are cut in half. So not only have profits been cut in half within a year due to the difficulty adjustment, obviously we've had the BTC block reward halving as well. I mean that is, yeah. I mean no wonder they're screaming. Jeepers. So let's see what this article says then. BTC mining profitability continues to tumble despite the token's price increasing. Well, yeah, because block rewards cut in half and difficulty adjustment has doubled. While communities living near mining sites are losing sleep and losing patience. JP Morgan analyst issued a report this week noting that block reward miners' daily revenue and gross profit both fell 6% in September and the third straight month of declines. This comes despite the fiat price of the BTC token having closed out the month of September several $1,000s higher than its level at the end of August. Again, so this goes to show you that miners are not bothered about number go up. Miners need to collect the token, and also the token needs to go up as well. But it's more about the block fee. So the block reward continues to get cut in half. The block fee needs to surpass the block rewards, so we have effectively a circulating economy. And therefore the miners can continue to sustain themselves. And that's not going to happen with BTC, that have basically stolen the transactions, put them on a second layer, so the miners can't sustain themselves. And again, driving the miners out of business by, if you can print an infinite amount of fiat currency, which we know the powers that be can do, they can just simply increase their hash rate as much as they like. It's crazy. And despite BTC's average transaction fees spending a good portion of September above their average rates in August, these fees account for only 5% of September's block rewards. It seems individual users were content to sit on their utility devoid tokens throughout September, praying for a sign that every number go up signal won't be immediately followed by a swift reversal. The average cost of mining a single BTC continues to outpace the block reward by a significant sum, which explains why so many mining operators have begun pivoting to servicing as data centers for artificial intelligence, AI, and other high-performance computing tasks. Compounding matters, the devastation caused by Hurricane Helene has knocked out some US mining operations offline. This week, ClearSpark saw its shares tumble around 14% after Helene forced many of its mining sites in the southeastern state to temporarily shut down, in part to persevere scarce electrical grid capacity for more pressing needs. CleanSpark issued an update on September 30th touting its efforts to bring most of these operations back online as soon as possible, while reassuring investors that its mining infrastructure suffered no material damage from Helene's wrath. Last month, CleanSpark announced the $5.8 million acquisition of 2 additional mining sites in Mississippi and a $27.5 million deal for 7 facilities in Tennessee. Both states were impacted by Helene and can be expected to face similar challenges in the future as climate change, some of which ironically is caused by burning fossil fuels. Seriously, it's caused by burning fossil fuels to meet high electricity demand, continues to increase the intensity of the annual hurricane season. Give me a break. Whoever wrote that crap from CoinGeek. Good grief. Bye. With BTC retail activity showing zero signs of life, finding a new raison d'etre has become an obsession for miners, particularly publicly traded US firms that need to convince investors not to smash that sell button. Some miners are deprioritizing mining BTC in favor of outright buying it, based on their expectation that the number will go up forever. So it's just a matter of time until they're back in the black. MAR, which was formerly Marathon Digital, recently spent $249 million buying 4,144 BTC. That's great coin. What a load of crap. Oh my god. At an average cost of $59,500 $500, at a sum that a BTC threatened to sink beneath after tumbling Tuesday on geopolitical concerns. Yeah. What's this? Noise pollution. BTC miners have rightfully come under attack for the strains they put on electricity grids simply to fuel speculative financial activity. That benefits a handful of token holders, but residents who live adjacent to a large mining operation have extra reason to complain, given the disruption to their lives from the constant noise generated by thousands of mining rigs and fans needed to keep the rigs cool. So that's what it's all about. Good grief. It's not easy scamming green. Oh, awesome! Right, who was the author on that? Who's still asleep to all this climate BS? Who wrote that? No, nobody wants to put the name to it. Just in my opinion, I'm sure it wasn't Kurt that wrote that. He's wise to all this climate change BS. Let's have a look at this then. Redis and Aerospike. The table below outlines key technology differences between Aerospike 7.1 and Redis Enterprise 7.2. Right, architecture. So Redis, which is Valkey stroke Redis Enterprise and Aerospike. Valkey, an open source Redis fork, is an in-memory data structure store. Redis Enterprise is a commercially supported implementation of Redis that adds distributed database capabilities. Aerospike is a distributed NoSQL database designed for high-scale, high-throughput, low-latency transaction processing through its patented hybrid memory architecture. Implications: Aerospike's natively distributed architecture, memory efficiency, storage flexibility and optimization, and extensive multi-threading combined to deliver maximum performance, scale and throughput. Redis can function well as a single instance, but has a rudimentary multi-threading and high overheads for clustering. Alright, I say, right. Caching, yeah, okay, right. You need to be a bit of a techie to understand all this terminology. Unfortunately, I'm not, and we've already been going for 22 minutes. We've got more to get through, so let's crack on. Check this out, 365 days of Bitcoin history. We are finally at the end. Can you believe it? What an epic journey this has been. 2nd of October. So apparently, according to Peter Rizzo, the first draft of the Bitcoin white paper was written by Satoshi Nakamoto on the 2nd of October 2008. There's no that link doesn't work, unfortunately. But apparently the message from Satoshi Nakamoto was you can download the pre-release draft at. Feel free to forward it to anyone else you think would be interested. I mean, I wonder if this is genuine. The electronic cash without trusted third-party abstract. A purely peer-to-peer version of electronic cash would allow online payments to be sent directly from the from one online party to another without the burdens of going through a financial institution. Digital signatures offer part of the solution, but the main benefits are lost if a trusted party is still required to prevent double spending. We propose a solution to the double spending problem using a peer-to-peer network. Beautiful. We'll check that with Bitcoin history and the rise and rise of Craig Wright as to when he released those. But also on the 2nd of October 2013, the Silk Road website, well known for the illegal drug selling, was shut down by the FBI, and Ross William Ulbricht, 29, was arrested on suspicion of creating and running the site, earning almost $80 million from it in less than 3 years. I mean, that is huge. Look at this, how the FBI agents captured Silk Road's dread pirate, Roberts. I mean, what a story. What a story. Existing in the shadows of the dark web and using the anonymous, it's not anonymous, Bitcoin currency, Silk Road was thought to exist beyond the law, but a 33-page document written by the FBI Special Agent Christopher Tarbell shows a number of apparent slip-ups and a routine border control check of post shipped from Canada led to the website being closed down. I mean, what a story. What a story. Crazy what went on. Right, we're at 25 minutes. Let's have a quick look at these. Oh, price tumbling down here. $44 and Gregcoin slipped to 60,773. B Crash, what a joke. Fisher Price Cash, who cares? We've got Bitcoin at $44, a magic number. Yeah, we already looked at the difficulty adjustment. Yeah, we did. We'll have a look at mining in just a minute. Network nodes 0.2, transactions 57, block size 53. So let's have a look at that. Nothing spectacular coming through there. Let's have a look at these. It's currently 43,500 times cheaper to transact on Bitcoin than Gregcoin, but you're mining Gregcoin at a 61% comparable loss. It just means all these shitcoiners have not been mining Bitcoin. Can you imagine how they're going to feel when they realize they've made a mistake? Oh my god. Daily average Bitcoin block size by network. So Bitcoin winning transactions. Daily Bitcoin transactions by network. Bitcoin winning transactions per block. Bitcoin winning fees. USD Bitcoin winning fees. Satoshi's Bitcoin smashing it. Block reward ratio not quite there just yet, but we'll follow that red line. The only graph you need to look at. The only graph you need to know about if you want to try and predict what's happening in the future. Daily accumulated Bitcoin blockchain growth by network. Look at that. As Satoshi Nakamoto said, it is strictly necessary that the longest chain is always considered the most valid one. And the longest, by the longest chain, it means the chain with the most proof of work, and the longest chain of signatures on it, which represents the chain with the most data on it, which is that one. Absolutely huge. Right, global hash rate 7 days, global hash rate 24 hours. Gregcoin hash rate, other miners other miners increased their hash rate on there to 4.17. B Crash hash rate, other miners reduced it to 33.3, giving the others a chance. Fisher Price Cash, who cares? But then we've got Bitcoin. Let's cross-reference that with what's on chain. Tau 47.89, Calvin will be pleased. Cove 28.8, QD Link 14.08, Gorilla Pool 6.34, other miners 2.82. Let's have a look at that crypto quant. Look at the exchanges reserves. Look, they are still cashing out like crazy. Cashing out hand over fist. Hand over fist. They know what's coming. They know what's good for them. They are literally dumping that shit. Don't want to be holding any of it. They know what's going to happen when the music stops. Oof, that's going to be painful. Let's look at the Tether weather. Oh, look at that. Not really too much gone on today. In the week's gone from 119.2 to 119.6. So that's 400 million gone in 7 days, like $500 million. What's it been on the month? 118.1, 119.6. So it's 1.5 billion. 1.5 billion gone in this month. Good grief. Short ratio is still 0.69%. Let's have a look at my viewing figures for SGAnon. We're now at 68,000. It's been going up every day. 68.1. Loving that. And Neil Oliver's video, it's gone up. So it was 161,000. We're now 162,140 views. Might have to compare that to see how successful it is against all his other videos. Let's have a look at this then. Just the price chart just quickly while we're here. Why not? Be rude not to. So this is Bitcoin versus Gregcoin. What is going on? Yeah, so losing out over these last few days. Plodding along today. Yeah. Let's have a look at Bitcoin versus USD. Yeah, that's down. Oh dear. You know, but we would expect it because the price is under attack, being artificially suppressed. Bitcoin versus Gregcoin on Orange Gateway. Yeah, very similar to what we've just seen. Bitcoin versus USD. Oh, popped up a little bit there. Good grief. Traders getting wrecked, trading against the US dollar, ups and downs. Overall market cap, $2.1 trillion. Gregcoin with a trade volume of up 3.27. 3.27. Up and down today. Let's have a look at Bitcoin. Where are we? Around the 70s, are we? 73. 44.43. Yep. 1.1 million asks in order to increase the price by 2%. Trade volume 24-hour trade volume $17 million. All right, there we go. That is a half-hour show. Hope you enjoyed it. So as ever, if you enjoy these updates, please ding your donations for your appreciation to either Satoshi@Sempi.com, Handcash.io, Simply.cash, Relasia.com, Rockwallet.me, or Senti.ch. We'll leave it there. Hope you enjoyed it. As ever, be aware, take care, stay safe out there, and we'll see you in the next one.